Hello there. You're listening to Linda Pinizzato of the Condo Expert. And today we've got another subject. Now, what is it? Investments, finances. How about a financial group? You know, a lot of times if you're buying into condominiums, for instance, you may find after a couple of years, all of a sudden you've got some extra cash. Or maybe even right away. Maybe you've bought into it and you didn't use all of your equity. And maybe there's other ways to invest. So, navigating around complex markets and different financial investment opportunities does need a professional. If you're planning on doing it yourself and you're not in that kind of a field, I really caution you. I mean, it's no different from people that try to sell their own home. They think it's really super easy, and then they find out it really isn't. And lo and behold, my phone rings and they contact me. And why? As you know, I'm a realtor and have been for the last 35 years with Sutton Group Quantum Realty. So today I had a lovely chat with a gentleman. His name is Conrad Kopatz, and he is an investment advisor. And the company is actually called Chippenham Financial Group. And lucky enough, we were able to track Conrad down, and he's at the show today. And I want to welcome you to the show, Conrad.
Thank you for having me.
Well, thank you so much for coming. You've got a lot of different opportunities that are going on right now. I know that you're partners with different groups. Maybe you can give me a little bit of background on Chippenham Financial Group.
Well, Chippenham Financial Group is an independent investment brokerage that allows an advisor to be independent but work as a team with other financial professionals. And unlike, I guess, the more traditional brokerages that put strict guidelines on what you can do, we look at the entire picture and get other professionals involved because it's important to deal with specialists rather than generalists. The group that I'm with right now and the team around me, it allows me to focus in on everything that's going on in the market and be able to offer the best advice possible, regardless if it's, how to put your kids through school, how to buy my next place, how to create equity quicker, or create tax deductions, because everybody likes to pay less taxes. These are some of the things we focus on.
Well, you couldn't have talked about the key thing that's on everyone's mind. It's April.
That's right.
I hate that month, I got to tell you. Like, seriously. Well, time catches up on you. That's the problem. And, but lo and behold, next thing you know, it's the end of the month and you need to file those taxes. I know that your company has, you've got different branches. I know you've got one in Toronto, but you actually have 7 branches?
Yeah, Burlington, Calgary, Winnipeg. So we're a national brand, and funny enough is the company was bought by one of my colleagues and his partner about a year and a half ago, and they started with 3 people. Now we're up to 40 in just a year and a half.
Wow, that's unbelievable. So all of you have been in the financial world in different sectors, but now have all come together?
That's right. So before, the firm was more institutionally based, meaning that, working with pension funds or other companies. Now we're bringing that specialty plus other areas to the regular consumer like you and me.
So your clients are serviced on Vancouver, Calgary, Winnipeg, Burlington, and you mentioned Toronto, Greater Toronto, Timmins and Moncton. That surprised me. So you're pretty much covering end to end of Canada, really?
Yeah, pretty much.
Yeah, east to west. It's awesome.
That's great. Each advisor has clients wherever they got them in the country. But like, for example, our team, looks after clients in Windsor, Barrie, Toronto. I have a client in Montreal, Alberta, Vancouver. But mostly it's in the GTA and south of the GTA.
Well, I think the biggest advantages nowadays, with the type of technology that we have going on, it really doesn't even matter if the people are in Canada, only because it's easy access to really reach anybody. I imagine, though, I know electronic signatures are now legal, of course, but can you take those automatically, or do you normally will have like authorization over the telephone to move forward on any kind of security that somebody may want to invest in?
It depends, truthfully. Like when it comes to, opening accounts and certain trades, then it has to be signed. And certain trades, you can do it verbally. So It's all over the spectrum. But when it comes to technology, I mean, we've had several Skype meetings with clients, so try to make convenient
Right.
for everybody.
Oh, that's perfect. Well, let's talk about your products. I know you've got a lot of different products. Some questions on here too is, I mean, equities, fixed income, bond products, registered accounts, I mean, RRSPs and so
hmm
on. What is one product that you find really interesting? Like, I mean, everyone's got a niche on something. So one item, like if I said to you, okay, I've got like $10,000, what would you recommend that I would register, like invest that in?
Well, actually, that's not enough information to make a
Okay.
proper judgment. But I would not say that we're product focused, where we look at the strategy and what the client's goals and needs are. And then we create that strategy, and then the products fill that void. So to answer your question, what we focus on mostly is, unlike most investment advisors that just look at assets, like your RSPs and RESPs, TFSAs, we look at the liabilities as well, and that's what makes us different. So we look at what's their biggest challenge, and that's usually they have a mortgage on their primary residence, and it's not tax deductible like it is in the U.S., and they're paying with after-tax dollars. So that's usually the biggest strain for a family when it comes to saving, being able to, build that proper financial plan for themselves. So what we do is we create a strategy that can help eliminate that non-tax deductible debt as quickly as possible while creating a tax-efficient cash flow and creating tax deductions. And that would generally build equity much faster. And I was a guest speaker at the real estate investment show this past weekend at the International Center, and we were looking at how that works with property owners. So people that have multiple properties, and we have clients that they have 20 properties, and they're trying to figure out, when am I ever going to pay these things off? They have like 25-year amortization periods. So it all depends on the client's situation, and that is where we typically, I guess, earn our bread and butter, so to say.
So I know that one of I mean, nowadays everybody would like to get their mortgage paid off the quicker, the sooner the better, no question. Because then really if you're living debt free, it's incredibly comfortable, aside from the fact that every month that money that you're saving, you could invest elsewhere. So now, are you talking about mortgages that you're reducing your cash flow? The cost of your mortgage is too high, reducing your cash flow, amortizing it over a longer period of time, bringing it to a shorter period of time, then you're bringing up your monthly payments.
Yeah.
So,
Well, what typically the bank does is, when you come in to the bank and says, oh, I want to lessen the strain, what they'll do is just amortize that mortgage longer, lower your payments, and then though you feel momentarily good about what you just did, you're actually extending, and you're actually paying the bank more interest for that mortgage. So what we do is we look at if someone has equity in their homes or rental properties, and we try and shuffle it to make sure that we can take that equity and show them how to build positive cash flow with it in a tax efficient way.
right. Okay. So I get you. So, it's interesting because I was looking at your figures and, in my background, I get the facts anyway.
Yeah.
We're advantaged nowadays because your interest rates are so low. I mean, I remember the days when interest rates were 12%, actually, in fact, 21%, believe it or not, and you weren't saving anything. I mean, it was hard just keeping your mortgages afloat. But nowadays, I mean, a $300,000 mortgage at 3% over 25 years, you've got it calculated at $126,000 of interest payments. And think about that. That's on a 3% interest rate.
Yeah. Well, people don't realize that they're getting themselves more in debt because housing prices are going up, but they don't realize that, yes, interest rates are at an all-time low. What are they going to do if they do rise? And I'm not saying that they're going to rise tomorrow, maybe a year from now, maybe 2 years, maybe because we're such a evolved economy that, the growth is not going to be there, so they can't raise interest rates for the long term. But people are going in right now because debt is cheap. without having a strategy behind it.
So your company will basically sit down with the individual and figure out strategies based on their employment, based on their, I guess, whether it's weekly, monthly, yearly incomes, based on their debt ratios that they have with other outstanding expenses they may have, like a car loan, leases, that type of thing?
That's right. Sometimes what we really look at is see all that cash flow that's coming out, and sometimes it's going to so many various places, and if you consolidate it or you tackle one after another in an efficient way, that might make sense for the client, right?
Right. Well, consolidation is incredibly important. I mean, I don't really believe sometimes that the general public understands, how they could actually consolidate. I know when I sit down with them, they have a little bit over here and a little bit over there, and they're not paying attention. They're paying minimum payments everywhere, yet they have everything sitting in a savings account somewhere. Yeah. So they're not getting anywhere, though.
I see that all the time.
And then you say to them, well, why do you have the money sitting in savings? Well, I have to have something. Well, wouldn't they just maybe get a line of credit and have that as a necessity?
For them, sometimes it's peace of mind, right? Saying, oh, I have 10,000, 20,000 in the bank just in case of an emergency, but they have $10,000 on their credit card. So it kind of defeats the purpose when on a credit card you're spending 18%, and in a bank account right now you're getting 0.5%, 1% on a bank account if you're lucky. So no wonder why the banks make a lot of money and they own the most expensive real estate in Canada and around the world.
Oh, absolutely. Well, I think, ideally, if people can give a call today we're speaking actually to Conrad Kopaz, and he's an investment advisor, and he's with a company by the name of Chippingham Financial Group. The idea here is to get information so that you can figure out your finance and your expenses, your assets, see what kind of money you have where, what you're spending, and let's try to consolidate and take a look at your overall portfolio and move ahead. So you're listening to Linda Pinizzato at the Condo Expert. We'll get more information. We'll be right back, so hang tight.
Using borrowed money to finance the purchase of securities involves greater risk than using cash resources only. Potential losses could exceed the amount you invested, and you may sustain a total loss of the initial funds deposited by you plus any amount of the loan that exceed the total market value of the securities. Past or historical performance of any security is not an indicator or guarantee of future performance or returns. You should not borrow to invest if you have a low tolerance for risk. You will be dependent on the income from the investments to pay daily living expenses, or if you have no way of repaying the debt if the income from the investment declines or stops.
Linda Pinizzato guarantees that you have the real estate knowledge you need to make the right decisions. Call Linda Pinizzato at Sutton Group Quantum Realty, 416-561-7373, or visit her at lindapinizzato.com.
Oh, my computer crashed.
Oh no, I've got a virus.
No way, no internet connection. Do you need help? Call IT Mayday, 647-977-7113. itmayday.com.